You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots, you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything else I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest. You know, wait, we got to stop this music. We got to stop this music because I think I've got a better song for this one. Travis Robinson is with us. How are you doing today, buddy?
I'm doing great. Good morning.
Glad to have you with us. And let me remind you, if you ever have any more finance-related questions, how do you like that song?
That was perfect.
Is that a good song?
But
We better bring a mic up.
Quick-witted.
There we go.
Sorry, quick-witted, yeah.
Yeah, little quick. You know, I've got that one sitting there right there, just ready for you. Yeah, I like that one. They'll probably get mad at us on some of this some of these channels and say that we're, you know, it's less than 7 seconds we're allowed to use that in it, or 30 seconds. It's, you know, what is it? IMBD, the contracts. They let us do that. Hey, let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. What are we going to celebrate today? Because, you know, it's got to, you know, if we're going to celebrate on Ron Siegel Radio, there's got to be food involved. So I look at this and I say, okay, day of winter solstice is National Flashlight Day. Stick away from that one. National Main Day. Brr, too cold for that one. Annie and Samantha Day. I don't even know what that means. So let's just stick with the food. Okay, guys, let's go with National French Fried Shrimp Day. You know, I don't know. I'm looking at these shrimp. If you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're actually seeing some shrimp and French fries. That looks good to me. You got to get big shrimp, though. I mean, because if you go with the little shrimp, then all it is breading. It's like, you know, you're not getting any shrimp in there. You just say French fried tail. You know, no, don't go there. Don't go there. Unbelievable. Let's take a look and see what the markets are doing today. Let's see. We've got I guess we're going to get a Santa Claus rally. Dow Jones Industrial Average up 489 points. The S&P 500 is up 52. NASDAQ up 152. Oil up $2 and a penny a barrel. Ow! We haven't looked at the gas prices around the country in a little bit of time. So let's take a look and see how cheap is gasoline. I actually went and filled my car yesterday. $3.89 I was able to pay for a regular unleaded. Not bad. California, though, on a whole, $4.36 a gallon. We're now safely below Hawaii at $5.11. Most of the year we've been above Hawaii. Nevada, Josh, you're still over $4. $4.03 is the average there in Nevada. Jody's at 3.5, 349.2. Brittany's at 286. Britt, might have to go to Colorado just to fill up. Although, I don't know. Lori says we could go to Louisiana at 276 a gallon. What are you paying for gasoline? Okay, let's move right along and see what's going on in the world. Why is the markets up today? Well, What would be your number one thought of why the markets are up? Well, of course, it's very, very simple. The government's going to waste another $1 trillion. And here's the issue. Think about this. I love the way our government, well, no, I don't. But could you imagine any industry in the entire world where you could put out a 4,000-page bill, 4,000-page ballot at 1:30 in the morning and say we're going to vote on it in the next 24 hours? Now, think about that. Now, the reason they do it that way is very, very simple. They don't want you to know what I'm going to tell you. Can you believe that there's more money in the budget for Middle Eastern countries' border security than there is for our border security? There's actually documentation or statute in there saying no money out of this $1.1 trillion monstrosity can go to protecting the border. Nothing. Does that tell you where the priorities of the government are? It's just unbelievable how much money they waste. Now, you know the definition of inflation. It's too much money chasing too few goods. So why don't we just throw another $1 trillion into the economy and see if that's not going to cause more inflation? Are these guys a bunch of morons? I mean, I don't get it.
Such an idiot.
I put it out there. I just say it the way it is. If you don't like it, I'm not sorry, but I'm just going to tell you, you're going to hear it the way it is on Ron Siegel Radio. But where do these idiots come from? Oh, yeah, we vote for them. That's right. We like these idiots. Here, more idiots. You want to hear more about idiots? We got California. So we have two new members of the state legislature, one in the assembly and one in the state senate. Both Hispanic ladies, but they're not allowed to join by statute the Hispanic caucus in the state legislature. Why? Because they're Republicans. Can I say this once again?
Idiot. Such an idiot.
Yeah, I mean, where do these people come from? But we vote for them, continue voting for these same folks over and over again. It just amazes me that we do that. But I'm going to go back to this spending bill. There's more money in there for Ukraine than there is for natural disasters in the United States. But you're not going to be able to see that anywhere because we don't want to share the information. We're going to put that bill out at 1:30 and say, if you don't sign it, well, then we're going to have to shut down the government. Let's think about this. Do you notice that the stock market actually went up when the Republicans won the House of Representatives and lost in the Senate? Do you know why that is? Because American people realize when our government does nothing, it's better than when they do something. So shut them down. Wouldn't that be better? I mean, when you think about this whole thing, it's just amazing what's going on right here. This bill is just, I misspoke. I'm not above saying when I make a mistake. It was not a $1.1 trillion spending bill. It was $1.7 trillion. Oh, unbelievable. But we did get a couple of pennies for the Defense Department. Well, they're going to get the money anyway, but $40 billion for Ukraine. Got to love that one, right? A ban on TikTok. That's important. Electoral Count Act reform. We're going to study that one. We'll probably spend a lot of money on that. Disaster relief, $40 billion out of $1.7 trillion. There's $40 billion for disaster relief. But they took out the child tax credit expansion. So isn't that special? And they're going to put a hold on the cars, the electric cars. They're going to put a hold on the cannabis banking bill. Unbelievable. You can reach me anytime. I just go crazy with this stuff. I might actually have to go and see if it's time for a 3-martini breakfast or something. I don't know. You look at these things, and you know what? It's about 10 hours that we've had this bill out available for people to read. How many people does each staff member of Congress have to have just to give the official a way to go and vote and have some semblance of knowledge of what's in this monstrosity? Unbelievable. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, got a question for you. How is it that housing is going to lead us into this recession, but prices are not going to dip? I'll tell you in a minute. What to expect from the housing market in 2023 and budgeting, investing money on low income, all that and more. Reach me anytime. Off air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a couple seconds.
Ron Siegel Radio, your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And yes, of course, let's take a look at the S&P 500. Right now, it is up about 51 points. The 10-year Treasury flat. Mortgage-backed securities are up 16 basis points. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. So what did the loans do yesterday? Well, it looks like the 30-year conforming 6.432, that was up. The 30-year jumbo, 6.26, that was up. FHA, 6.347, that was up very slightly. 30-year USDA for our rural borrowers out in the rural areas. Ironically enough, there's one zip code in Santa Ana that qualifies as rural. 6.327, that was up. And the best loan on the market, the 30-year VA loan, 6.187, that was up. So we got a clean sweep all the way across the board. All the rates are a little bit higher. But why? That's the whole issue, is why are these things happening? Well, has a lot to do right now. Existing home sales is what's going on today. Measures closings on existing homes showed that sales were down 7.7% in November to 4.09 million annualized pace, which was weaker than expectations, looking for a 6% decline. Year-over-year basis, sales are down 35%. Inventory continues to move lower after peaking at 1.3 million in August, as it does every time this year after the normal seasonal build, and declined for the fourth straight month to 1.14 million. This is a decline of 6.6% from the previous report. Continue to limit the downside in home prices. Notice that. Limit the downside in home prices. Why? Because there's not enough supply. If there was the supply, then we'd have an issue. But there's not enough supply. That's why we've got a limit on the downside of pricing. But here's the other part of that nobody's going to tell you, is that when people are not buying houses, they're not doing as much on repairing that new house to move in. They're not putting in the new carpet, the new paint. So there's going to be a slowdown in the residual expenses. No moving companies, no title insurance, no real estate, right? So all of that's going to be driving a recession, or helping to drive the recession. But the prices of the real estate's not going to drop because there's not the properties available and the buyers are not out there buying. So it's keeping that in balance. First-time home buyers have accounted for 28% of sales, which is unchanged from the previous report, but amazingly 2% higher than this time last year. Cash buyers accounted for 26% of sales, also unchanged. Investors purchased 14% of homes, which is down from 16%, and means that 1 out of every 7 homes is an investment property. Make sure that you give us a call if you want to understand more about that. Foreclosures and short sales accounted for 2% of all transactions, basically unchanged. NAR Chief Economist Lawrence Yun thinks that things are going to get better in the coming months. He said the market may be thawing since mortgage rates have fallen for 5 straight weeks. The average monthly mortgage payment is now almost $200 less than it was several weeks ago when interest rates reached their peak for this year, about 2 months ago. Not reflected in the numbers yet, but it is a good sign for the coming few months and should reflect higher sales. Realtor.com. According to them, their rent growth slowed in November for the 10th month in a row. Rents are now up 3.4% year over year as of November, which is the slowest growth rate in 19 months. The increase has decelerated considerably from the peak in January, where they were up 17.4% year over year. This is not showing in the CPI reports yet, but we should see deflation from this component in the coming months. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. We'll always love having some fun here in the radio studio. So we've got a new theme song. Travis Robinson is with us. Not going to be coaching us. Well, maybe he'll coach us today.
Sure. I coach on some health insurance, so always exciting stuff, right?
You know something? I went to the local saloon yesterday, and that was the top topic in the whole place.
Oh, I'm sure.
Health insurance.
I'm sure, yeah.
No one wanted to talk about football, especially out here when we're USC fans.
Yeah.
But we wanted to talk about group health insurance.
Right, right.
But I guess some people have to do it, right?
It is what it is.
Travis Robinson, Maxwell Agency. So, you know, Travis, you've come in several times, and I never asked you a simple question.
Shoot.
What got you into this line of work?
Coaching or employee benefits?
Employee benefits. Let's start with that, and then we'll go to coaching.
Yeah, no, employee benefits. It was just a matter of sales. My dad was always in sales and was able to make all of my sporting events and everything. So when I had to make a life decision or important decision on what I wanted to do, I got into sales because it allowed me to have flexibility to be able to coach, to be able to go to my kids' sporting events. And I found out that I was pretty good at it.
So you like doing it?
I do. It's great.
And it gives you the opportunity. So do you get to your kids' sporting events now, or are you busy coaching?
Well, I do both. So I'm able to coach, and then my son plays baseball at Brea Olinda. So I'm able to make 90% of his games.
Could be the next Cole Garrett or whatever.
Yeah, hopefully.
then you can retire.
No, who just signed this morning for $630 million? Aaron Judge.
360.
Yeah.
You dyslexic or what?
Yeah, I am. I
didn't know that. My son is too.
I was watching the sports something, and I was watching. So I told him before he went to school. I said, "That's what we're shooting for right there, buddy."
Yeah, I mean that's not a bad way to go. I mean everybody has to have goals,
yeah.
Right?
Yeah.
Okay, so you decided on sales. So what particularly brought you to group health?
I don't really remember, to be honest with you. Well, I got into life insurance, selling life insurance, and life insurance is more your and financial planning was kind of the goal.
Okay.
And then kind of getting more into it. Life insurance, you get paid when you make a sale. With the group health insurance, and we're very honest with our clients about this, is we get paid every month. Every time they write a check to pay their insurance, we get paid on that. So that's what one of the reasons we do so much for our clients is because they're paying us once a month, or they're paying their insurance carrier, and then we get a commission from that. So helping business owners kind of navigate this world and working with small business owners is fun. I enjoy it.
Okay, and I'm going to put you on the spot here because we don't even plan our shows.
Right.
What's your most favorite case that you've ever dealt with, trying to work with a company or solving a company's dilemma or situation?
Sure.
Or
Yeah, there's a manufacturer in Orange County. He had about 35 employees, and it was just him, and he was doing all sorts of stuff. And he's good at manufacturing parts, right? But he's not necessarily good at, finding the best deal for his employees or staying in compliance, right? So there's a ton of compliance issues now that we helped this business owner. And if he was facing an audit, we came in and we cleaned up his books. We made sure he was in compliance with employee handbooks, sexual harassment training, ACA compliance, which saved him a ton of money in penalties. So that was one that
makes
really
you feel
helped
good.
him. Yeah, well, I mean, we helped him. If he got hit with the fines that it could have put him out of business. So making sure that these business owners are in compliance and they're able to do what they're good at and let us handle all that boring but important stuff.
And that's a fascinating part, because so many people get into business and they got into business because they liked whatever, right? They liked doing building airplane parts, or they liked selling cars, or they liked building houses,
right?
And they were good at building airplane parts or selling cars or houses or boats or whatever, but they didn't realize, especially in California, there's so much regulation that you could be so far out of compliance and have no clue that you're out of compliance.
There's a ton of compliance, but once you reach 5 to 6 employees, then you have to start really
5 or 6.
Yeah, I mean, 401k, sexual harassment training, those all thresholds hit about 5 employees. So there's a ton of stuff that
so you could be a almost a solopreneur, right? You could be I just had in here recently a family law attorney,
Mm-hmm.
right? So she's got herself, she's got a receptionist, she's got a couple paralegals,
Yep.
a secretary, and now she's got to be talking to you.
She should be. Yeah, if she wants to stay in compliance, absolutely.
Right.
And save money, right? So the biggest thing we do is help people save money. And they'll never get a bill from my office. We do not bill them. Like I said, they pay their health insurance bill once a month. We get a commission for that. So that's why we do all this stuff, because we're getting something from them once a month. We want to return the favor.
And so now commissions didn't even plan on going down this world.
Sure.
But commissions in insurance are pretty much regulated, aren't they?
Yeah, by the state of California.
Regulated by the state of California.
Yeah.
So basically, the way that you guys are looking at it and saying, okay, they say we get X, but as part of our business model, we want to say, okay, we're gonna spend that X portion of it's going right back to our clients to do all these other events for them.
Right. So that's maybe what differentiates us from other brokers, is that we put that money back into our clients and we make sure that they're in compliance, or that their employee handbooks are updated and paperless. And there's a lot of stuff that we do to give back. So that's what makes us different, for sure.
And it's a big issue, because when you really think about it, what does employee handbooks have to do with health insurance, other than that there's a that you probably have to offer it, I guess, in the state of California,
Mm-hmm.
but it's really they're not really, you'd think that they'd be two different areas, but you guys have kind of merged them because of the way you want your business model of giving back.
Right. Well, we want our clients or our business owners to come to us for anything related to employees. So we don't do employee handbooks, but we pay to have them done. So you're not the legal department, but absolutely not. No.
Right.
No,
But because I did have somebody just the other day that called me, and they had some real estate questions.
Yeah.
And you have to be very, very candid with people that, hey, I can tell you from a legal standpoint, I can tell you what I would do and what my beliefs are.
Yeah.
But the bottom line is call an attorney.
For sure. Yeah.
Right.
Well, I'm not an expert, but I know a lot of experts.
I know the expert. Right. So if you want an expert, call Travis, and he's not going to be the expert. He's going to tell you who to talk to. And I say the same thing, right? I've told you many times, I don't give legal advice on Ron Siegel Radio, but if you need legal advice, give me a call.
Yeah.
And I'll put you in touch with somebody that'll give you legal advice. Right. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. What to expect from the housing market in 2023. We'll chat about it. Budgeting and investing money on low income, how to start saving money, group health insurance, more with Travis Robinson. We'll be back in just a couple of minutes. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back real quick.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. What to expect from the housing market in 2023. 2022 housing market has been defined by two key things: inflation and rapidly rising mortgage rates. In many ways, it's put the market into a reset position as the Federal Reserve, the Fed, made moves this year to try to lower inflation. Mortgage rates more than doubled, something that's never happened before in a calendar year. This had a cascading impact on buyer activity, the balance between supply and demand, and ultimately home prices. And as all those things changed, some buyers and sellers put their plans on hold and decided to wait until the market felt a bit more predictable. But what does that mean for next year? What everyone really wants is more stability in the market in 2023. For that to happen, you'll need to see the Fed bring inflation down even more and keep it there. Here's what housing market experts say we can expect next year. What's ahead for mortgage rates in 2023? Moving forward, experts agree it's still going to be all about inflation. Inflation is high, mortgage rates will be as well. But if inflation continues to fall, mortgage rates will likely respond. While there may be early signs inflation is easing, as we round out this year, we're not out of the woods just yet. Inflation is still something to watch in 2023. Right now, experts are factoring all of this into their mortgage rate forecasts for next year. And if we average those forecasts together, experts say we can expect rates to stabilize a bit more in 2023. Whether that's between 5.5% and 6.5%, it's hard for experts to say exactly where they'll land. But based on the average of their projections, a more predictable rate is likely ahead. If you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you can actually see a mortgage rate projection chart for 2023. Let's take a look at just the averages, because we've got Freddie Mac, Fannie Mae, MBA, NAR, all of them in there. By the fourth quarter of 2023, they're averaging out at 5.73. Nice little drop right there. So remember the mortgage, the RSR two-step. That's good for you. That means we'll start the year out about where we are right now, but we could see rates tick down if inflation continues to drop. As Greg McBride, chief financial analyst at bankrate.com explains, quote, mortgage rates could pull back meaningfully next year if inflation pressures ease. Now, we've talked about that so many times. That's a big surprise.
Surprise, surprise, surprise.
In the meantime, expect some volatility as rates will likely fluctuate in the weeks ahead. If we see inflation come back under control, that would be good news for the housing market. What will happen to home prices next year? Home prices will always be defined by supply and demand. The more buyers and fewer homes there are on the market, the more home prices will rise. And that's exactly what we saw during the pandemic. But this year, things changed. We've seen home prices moderate and housing supply grow as buyer demand pulled back due to higher mortgage rates. The level of moderation has varied by local area, with the biggest changes happening in overheated markets. But do experts think that it will continue? The graph again shows the latest home price forecast for 2023. As the different colored bars indicate, some experts are saying home prices will appreciate next year. Others are saying prices will come down. But again, look at the averages, and I'm going to say, they say look at the averages for a 0.1%. I'm going to tell you, don't do that. Look at the home price expectation survey, because that is an average. It's kind of funny when they average these things together, yet they put the home price expectation survey as part of the averages. So the other ones skew these things way too much. 2.6% appreciation is what home price expectation survey says. Truth is probably somewhere in the middle. That means nationally we'll see relatively flat or neutral appreciation. Lawrence Yun, chief economist at the National Association of Realtors with a vested interest, says, quote, after a big boom the last 2 years, there will essentially be no change nationally. Half of the country may experience small price gains, while the other half may see slight price declines, unquote. Bottom line, you got to look in your own unique area. If you want to know what's going on in your area, rsrlistana.com, rsrlistana.com. Go in there, put the information in there. It's going to come back with an Anaheim zip code. Don't worry about it. You can change that to get your zip code and see what's happening with home prices in your area. And you can also, you get that and it'll come out as often as you want. You want them to send it to you once a week or once a month, once a quarter. You can also do the same thing with rsrhomescout.com. And they've actually got something from Quantarium. Quantarium. It's one of the 4 different valuation items that are put on the sheet for you. RSR Home Scout. Quantarium will be the best one out there for you. And it'll also have the one that's often most erroneous, but it's the one that you know of the most. So that's why we put it there. That is the Real-Time Real Estate segment brought to you by our friend, the area trusted real estate professionals at Ron Siegel Radio. rsrhomescout.com, rsrhomescout.com. Continue our conversation. Travis Robinson is with us. Maxwell Agency, is that right?
That's right. Yep.
Got a memory. Every once in a while I remember some of these things correctly. So we're talking about group health, and I guess you guys got to change a little. It's because I always say group health. It's really group health and benefits.
Employee benefits.
Employee benefits.
Yeah, group health insurance. It's all the same. And that's really what we specialize is, I mean, we offer all these other added things, but saving business owners money. And we're doing that quite a bit right now in the fourth quarter. Anyone that's with, Blue Shield, we've got other carriers that are coming in 10 to 20% cheaper monthly, which is saving quite a bit of money for business owners and the employees.
So I got an idea for you.
Yeah.
I don't know if you do this already. Maybe you do, maybe you don't. But, we get a lot of folks coming on, visiting us on Ron Siegel Radio.
Mm-hmm.
And my son works for a Fortune 100 company. And I get this, 70-page PDF file of all of the different community discounts he gets.
Discount. Okay.
So Apple gives them a discount, or Regal Theaters gives them a discount,
right.
Or, we were just talking at dinner the other night. Wouldn't that be fun to offer that as a benefit to all of your employees?
Yeah, there's a lot of wellness programs out there that that offer discounts or things to employees, and we do that as well. That's, again, it's not my company, but we can roll that in for a lot of larger companies like that, where they give discounts and certain things to their employees for sure.
My son gets a discount on his shoes.
Wow.
I mean, he walks 15,000 steps, 16,000 steps every day. So it's,
yeah.
But I mean, it's just a thought. I mean,
for sure.
It'd be fun, brainstorming on air. You want to listen to us brainstorm? That'd be fun for me to have one of my team work with that and see if we can put together something like that. That'd be fun.
Yeah, absolutely.
So are you? I think last time you were in, you said that you're basically your new what is it? Re-enrollment?
Open enrollment. So fourth quarter. About 80% of businesses in California have open enrollment. And that's when most business owners like to take a look at their benefits, or they get their renewals, right? So, hey, you're going to get a 15% rate increase, if you're with this carrier on this plan. So what we do is we take an employee census, which is employees' name, date of birth, zip code, and independence, and then we run
independence,
right? You want not dependents.
Dependents.
Sorry. Dependents. So any dependents you have on the plan, and then we'll take that and we'll compare apples to apples. So whatever plan you're currently on, we'll take a look at other carriers, and rates are regulated by the state of California. So
that's how you save them money, is because of your. So you do the similar. I tell people that with our lending team, you can kind of look at us as being your personal shopper.
Yep.
You're a personal shopper.
Yes. So
you just don't do it at Nordstrom.
Well, we're a broker, so we're contracted with every carrier. So we can take exactly what plan they're on and see what they're currently paying, and we can compare that apples to apples to other carriers and other plans. So a lot of times we can even beat their co-pays or office visits or prescription drugs. We can show them this is what you're paying. This is what, if you switch carriers, if you come off of Blue Shield and go to another carrier, we can save you this much money.
Thankfully, Blue Shield is not a sponsor of this radio show.
Well, Blue Shield was very, very popular the last 2 years. They had very good products, and they still do. I mean, I personally have them. So it just depends on what hospitals they contract with, but other carriers are coming in very competitive.
So the fascinating thing, from what if I'm understanding correctly, is we look at, when leading a lending team, we understand that certain times, certain companies want certain business.
Right.
So sometimes a investor wants self-employed people, so they're going to price aggressively for self-employed, but they don't want government loans, so they're less aggressive there.
Right.
You might be seeing the same thing, and we have to understand that as a personal shopper in a lending company.
Correct.
You're basically doing the same thing from the insurance side. They're saying, okay, the last 2 years, company X wanted to increase market share, so they're going to price aggressively.
Yes, absolutely.
Assuming that you're not going to be smart enough to shop around next year, and you're just going to renew, and they're going to give jack up prices.
Right. Well, it's up to their broker to really come in and educate the business owners and say, hey, we're seeing better prices, better plans with this carrier. Or, often the last 2 years during COVID, we didn't see a lot of rate increases. So carriers were being very, staying kind of level,
Sure.
not getting.
They didn't want to look and say, yeah, there's a lot of people getting COVID, and we're going to charge more money.
Right.
Wouldn't look very good.
But now we're seeing bigger rate increases, and other carriers are coming in more competitive. So we're seeing a lot of business owners save some money and move carriers.
So when we come back, I want to talk to you about, is it too late now to be changing? We'll talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. We're going to chat more with Travis Robinson, Maxwell Agency, when we come back. We'll also see about budgeting and investing money on low income, how to start saving money. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report and it is wrong. What are you doing about it? Credit Sanitizer. 79% of credit reports are wrong. 79%. And I've been looking at credit reports. I helped the first family I ever helped with a loan was in 1983. So I've been looking at credit reports a long time. I've never seen one that's completely accurate. So I don't know where that 21% is. Hey, 2 quick tips for you. I like to give things away. It's holiday time. If you want to know some credit tips, rsrcredittips.com, rsrcredittips.com. Or if you want the mistakes, rsrcreditmistakes, plural, rsrcreditmistakes.com. So you can find both of them, the tips and the mistakes, rsrcredittips.com, rsrcreditmistakes.com, and pay your credit cards the right way. No, not by check or electronic transfer. That's not what I'm talking about. rsrccpayment.com, rsrccpayment.com. So let's take a look and see about budgeting and investing money on low income, how to start saving money. You're living within your means, but you really don't feel like you're living. You find it easier to spend than to save. Surprise, surprise. Maybe you feel like you're not earning nearly as much money as you should. It can be hard to prioritize saving or any financial priorities over simply just staying above water and trying to enjoy a weekend every now and then when you're making a low income or minimum wage. How do you start saving and budgeting money on a low income? Can you really build wealth and invest with a low income? The order of operations when trying to build wealth is important, says Lending Tree's millennial money expert Sarah Berger. Quote, you hear all this advice about what you should be doing with your money, but when you're making minimum wage, you don't have money to dedicate to all those priorities at once, unquote. These mixed messages, she says, are one of the biggest challenges for anyone earning a low income. How do you get started building wealth when you don't know where to start? What are the best financial moves to make when every dollar matters? So we're going to give you 4 steps to start saving and investing money with low income in the order you can make them help you the most out of your financial move. From the experts, how to prioritize your financial goals when budgeting on low income. As long as you can live within your means, you should have the ability to save and still make big financial moves over time. Berger says for most people earning a low income, they should prioritize their financial goals in the following manner. Number 1, establish a healthy emergency fund. Number 2, pay off high interest debt. Number 3, build a retirement for the long term. Number 4, pay off smaller low interest debt. If you're able to wiggle your budget even a little, you can follow the steps to help you build wealth over time. That is the Your Credit Matters segment brought to you by creditsanitizer.com. You have a credit report, it is wrong. What are you doing about it? Continue our conversation. Travis Robinson is with us, Maxwell Agency. They handle, no, they're not a talent scout firm. Not even a athletic agency.
No way.
No, you're not going to be the next Lee Steinberg, I guess.
Absolutely not.
So, in last segment we were talking about open enrollment. So, do you guys just go on vacation for the next 9 months, or?
No, a lot of businesses are renewing now, but if you have employee benefits or group health insurance, you're in a contract with that carrier, but that contract's kind of one-sided. That means your rates are locked in for a year, but you can switch insurance any time of the year. It just has to be on the first of the month. So,
okay.
Yeah, so if you renew and you renewed already, but say you got hit with a rate increase and your broker didn't bring you options, we can requote it now and we can change it January, February, March. We can do that for you. Any time of the year.
Is there separate plans? So if you're quoting me a program and you're coming in 10 or 15% cheaper, does that mean I'm getting less benefit?
No, you can look at networks. There's bigger networks and smaller networks. And if all of your doctors are on a smaller network, that can be 10 to 20% cheaper. So we'll do a doctor search for you and say, hey, if all of your doctors are within this network, then let's go to this smaller network and save you that 20%. If you have one doctor that's out of that network, then we'll put you on a larger network plan so that you don't miss. There's no doctor interruption. There's no plan interruption if you switch carriers. We can make sure that every doctor you have is within the correct network.
All you have to do is give them a copy of the new card.
Yep, correct. Yeah, there shouldn't be any interruption.
New enrollment card. So it's pretty simple stuff.
And we do a lot. Well, it can take a lot of work, but we'll do all that for you. If you have medications or you have a procedure coming up, we can get pre-authorization. So if you hit the first of the month, everything's pre-authorized. Your medications are approved with that new carrier. So because some people experience headaches, but we do a pretty good job of making sure that you don't experience that.
So it's obviously going to be driven by some decision maker, right? I mean, because you're not going to be able to look, if I've got a company of 20 the likelihood of us all having the exact same primary care doctor is going to be pretty slim.
Correct.
Right? So does the rank and file have any voice in this, or is it just whoever the decision maker is, or the owner of the company, or principal? How does that work?
Well, we will meet with the owner and we'll go through quotes and options, but then we also sit down with every single employee and talk to them and say, tell us what doctors you have, what doctors you need to see, and then we make sure that they're educated and that they know which plan that they should go to. So yeah, we sit down with every single employee and talk to them, and so they're educated in their decision.
About I'm guessing somewhere around 20 years ago, I used to have a group plan that we used, and I don't even know if this is still available even anymore. So there was one I think I had like 8 or 9 different choices. And as a company, what we were able to do is say, okay, we're going to give you X dollars, and you can go to any one of those companies that you want to go to.
Well, not really, because if your employer offers Blue Shield, then we can write Blue Shield along. You can do a wrap, so you can offer Blue Shield and Kaiser together. So you can offer different carriers, but it's got to be contracted. So you can't do Blue Shield and Anthem.
Okay.
But you can do a wrap with Kaiser. Kaiser will work with just about anybody. That's because Kaiser is very popular in Southern California. So
because they're too big.
Yeah.
Yeah, it's that's a whole difference. We could do a whole show when you're not here, Travis. I don't think you want to be here if I get on a rant on that Kaiser.
Right. No.
But the bottom line is okay. So it's not like you just say, okay, there's 8 carriers. I don't even remember the name. There was a company. It was in Orange, I think, that they as a company, I could go and just say, okay, we're going to offer this.
That's Cal
package.
Choice.
Is that what that is?
Cal Choice. So yes, Cal Choice offers multiple carriers under one umbrella, and you can choose those carriers, and then you're as an employee, you just get one bill, but your employees can choose a couple different carriers, and we're contracted with Cal Choice as well. They do a great job.
So why would I not want that for my employees? Is that an expensive option?
No, the rates are the same. At California, your insurance is based off of your age and your home zip code, period. So
okay,
it's just there's more options. Maybe some people don't know about Cal Choice. Maybe their current brokers aren't educating them on that. But we quote everybody and bring back your current plan with other options. And hey, we can save you money. We can increase your, we can make your plan better and save you money at the same time. So it just depends on what your broker's doing for you.
So yeah, and that's a big issue right there, because I remember going through this many times, because we had our own businesses for decades, and I think I had hair when I started going through this stuff, because it could and now that you understand more, but you have less hair than I do.
Yeah.
But I mean it's unless you have somebody really educated, it can be really confusing.
Well, and I have an awesome team behind me, so it's
so you don't have to be educated.
I'm not educated at all.
Okay, so
but I have people that I work with that are amazing and that do a great job, and so it makes my life much easier, obviously.
And that's the key thing to almost everything. And I guess most entrepreneurs would have a much more enjoyable life if they followed that same thing and said, something, I want to hire the best people I can to be behind me doing things that they're smarter than me at.
Right. Well, you shouldn't have to be on hold with one of these carriers for 45 minutes. Let us do that for you, right? You've got other business owners have other things to do.
You probably got more clout with them than I do.
Not really. We get paid to sit on hold. So, if that's what it takes to fix an issue, then that's what we'll do.
And so you're basically educators and service.
100%.
It's fascinating when you listen, because I mean, like I say, I haven't dealt in this world for several years, but I used to.
Right.
And it's just amazing. I mean, it was like we used to always look at it as a nightmare.
It can be. It definitely can be. And people don't really want to deal with it until there's an issue, right? Or
even as an employee going through enrollment.
Right.
You look at it and say, why do I have to do this? I mean, I just did it for my son.
Mm-hmm.
And we just did this last year. Why nothing's changed. The only thing that's different is he's a year older.
Well, so your rates go up, and a lot of times your plans will change, and maybe not drastically, but there will be small changes that you need to know about, so, and that's what we do is we sit down with all the employees, we educate them.
I don't think his company would sit down with all of them.
Well, yeah, probably
It's
not.
probably a couple 100,000
There's,
people.
I mean, a lot of brokers don't, and a
Yeah.
lot of, you know.
So you guys are doing that with the what's your sweet spot as far as clients? You know,
we work
headcount?
anywhere from 2 employees, and our biggest is 500 employees. But I would say our sweet spot is blue collar manufacturers, 20 to 100 employees.
20 to 100.
20 to 100 is where we can really make a big difference for a business owner.
If you're a business owner or you work for one that has 20 to 100 employees, give me a call at 800-306-1990, 800-306-1990. Not that I know about this stuff, but I know Travis's number, and I'll put you in touch. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items that affect your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Over the limit, I'd like to call him something